afternoon, dear students. A warm welcome to a new session on financial management. Now, in this slide, we will talk about the factors affecting investment or capital budgeting decisions. And the first point talks about cash flow of the project. Now, let me elaborate. Whenever a company is investing huge funds in an investment proposal, it expects some regular amount of cash flow to meet the day-to-day requirement. Now, the amount of cash flow an investment proposal will be able to generate must be assessed properly before investing in the proposal. Now let me talk about the second point, return on investment. Let me elaborate. The most important criteria to decide the investment proposal is rate of return. It will be able to bring back for the company in the form of income. Let me talk about the third point, which is investment criteria. And how do we elaborate? Along with return, risk, cash flow, there are various other criteria which will help in selecting an investment proposal, such as availability of labor, availability of latest technology, availability of machinery, etc. Now let us move to factors affecting financing decisions. While taking financing decisions, the finance manager has to keep some of these factors in mind. Number one is cost. Let me elaborate. The cost of raising finance from various sources is different, and therefore finance managers always prefer the source with minimum cost. Let's talk about the second point, that is risk. Now, more risk is associated with borrowed fund as compared to owner's fund securities. The finance manager compares the risk with the cost involved and prefers securities with a moderate risk factor. Now let me take up the third point, that is cash flow position. Now how do we explain? Now, the cash flow position of the company also helps in selecting the securities. With smooth and steady cash flow, companies can easily afford borrowed fund securities. But when companies have shortage of cash flow, then they must go for owners fund securities only. Now, let me come down to the fourth point, control considerations. Now, what do you mean by this? If the existing shareholders want to retain the complete control of business, then they prefer borrowed fund securities to raise further fund. On the other hand, if they do not mind to lose the control, then they may go for owners' fund securities. Let's talk about the fifth point, which is called as flotation cost. Now, what does that mean? It refers to cost involved in issue of securities such as broker's commission, underwriter's fees, and expenses on prospectus. Firms prefer securities which involve least flotation cost. Now let me talk about the next point, which is fixed operating cost. Let me elaborate. If a company is having high fixed operating cost, then they must prefer owner's fund because due to high fixed operational cost, the company may not be able to pay interest on debt securities, which can cause serious trouble for the company in future. Let's move to the last point, state of capital market. Now, the conditions in capital market also help in deciding the type of securities to be raised. Say, during boom period, it is easy to sell equity shares as people are ready to take risk, whereas during depression period, there is more demand for debt securities in capital market. Now, let me talk about dividend decision. Now, this decision is concerned with distribution of surplus funds. The profit of the firm is distributed among various stakeholders such as creditors, employees, debenture holders, shareholders, etc. Now let us look into these factors that affect dividend decisions. The first one is called earning. Dividends are paid out of current and previous year's earnings. If there are more earnings, then company declares high rate of dividend. Whereas during low earning period, the rate of dividend is low. Let's move to the second point, which talks about stability of earnings. And what does this mean? Companies having stable or smooth earnings prefer to give high rate of dividend, whereas companies with unstable earnings prefer to give low rate of dividend. Now let's talk about the third position, that is cash flow position. Paying dividend means outflow of cash. Companies declare high rate of dividend only when they have surplus cash available. In a situation of shortage of cash, companies prefer to declare no or very low dividend. The fourth point talks about growth opportunities, and let me elaborate. If a company has a number of investment plans, then it should reinvest the earnings of the company. As to invest in investment projects, company has two options. One, to raise additional capital, or invest in retained earnings. The retained earnings are cheaper source as they do not involve flotation cost and any legal formality. Let's talk about stability of dividend. Some companies follow a stable dividend policy as it has better impact on shareholder, and it also improves the reputation of a company in the share market. Let's come down to preference of shareholders. If a company is having large number of retired and middle class shareholders, then it will declare more dividend and keep aside less in the form of retained earnings. Whereas, if on the other hand, a company is having large number of young and wealthy shareholders, then it will prefer to keep aside more in the form of retained earnings and declare low rate of dividend. Now let's move on to access to capital market. If capital markets can easily be accessed or approached, and there is enough demand for securities of the company, then company can give more dividend and raise capital by approaching capital market. Let's talk about legal restrictions. The Companies Act 2013 has given certain provisions regarding the payment of dividends. Apart from the Companies Act, there are certain internal provisions of the company, that is, whether the company has enough flow of cash to pay dividend. Let's move on to contractual constraints, and let me explain. When companies take long-term loan, then financier may put some restrictions or constraints on distribution of dividend, and the companies have to strictly abide by these constraints. Let's move to the last point, stock market reactions. Now, the declaration of dividend has impact on stock market as increase in dividend is taken as a good news in the stock market and the prices of security rise. Thank you, dear students, for being patient. I hope this video will help you to do well in the coming board examination. Thank you.